Complete equity research analysis. Dow Inc. 52-week high. Low dollar, 25.06, $55.97. Business model and operations. Products, services, packaging, and specialty plastics. Polyethylene, elastomers, industrial intermediates and infrastructure, polyurethanes, construction chemicals, performance materials and coatings, silicones, architectural coatings. Revenue streams. Segment revenue percent of total key drivers, packaging and specialty plastics, $5.3 billion, 51% licensing. Hydrocarbon sales, industrial intermediates, $2.9 billion, 28%, polyurethanes. Construction chems, performance materials and coatings, $2.2 billion, 21%, automotive coatings. Silicones geographic revenue split. North America, 45%, Europe, Middle East, Africa, 30%. Asia Pacific, Latin America, 25%, 611. Key financial metrics. Metric value commentary PE ratio.
8.
73.85 elevated due to earnings volatility. PB ratio 1.27 below sector AVG. Of 1.8 dividend yield 10.57% semi-annual $1. Share $2.80 annualized debt to equity 103.62% high leverage. Total debt $15.9 billion, return on equity 2.06%, weak profitability versus peers, current ratio 1.54. Quick ratio 0.83, limited liquidity cushion, 3-year rev growth minus 1.3%, macro headwinds. Metric value trend, total debt $15.9 billion, stable Coke cash reserves $1.5 billion, down from $13.2 billion. In 2023, net debt $14.4 billion, elevated position, free cash flow $583 million, negative due to CapEx $346. Free cash flow trend 2020, $3.1 billion gives 2024, $583 million. 5. Management and shareholding. CEO Jim Fitterling. CFO Howard Ungerleider. Chairman Jeff Fettig. Institutional ownership 79.2%. Retail. Other, 20.8%. 6. Competitive analysis. Main competitors. BASF say Leondell Basel. DuPont. Sebec 5. Competitive advantages. Moat description, integrated operations, low-cost U.S. shale gas feedstocks. Sustainability leadership, 89% of innovation portfolio aligned to sustainability. $1 BNPV from Nature Project scale and IP 7,200 patents. 113 global manufacturing sites. 7. Valuation analysis. Metric DOW sector AVG. Verdict forward. PE 46.51. 15.88 overvalued. PEG ratio 11.772.14 overvalued. Price sales 0.501.2 undervalued. Intrinsic value $45.10 current. $29.5 for 35% undervalued. Analyst ratings. AVG target price $38.29. Zacks rank number 4 due to earnings downgrades. 8. Growth prospects, strategic initiatives. Path to Zero project. Delayed net zero ethylene cracker. $6B cash plan. Asset sales and $1 billion cost cuts by 2026. 3. Circular economy. Partnerships with Mora Technology. Industry tailwinds. Global sustainable packaging market. 6.3% CAGR. ESG-driven demand for bio-based materials. 9. Risks. Risk category impact, commodity, cyclicality, 70%. Revenue tied to ethylene, polyethylene prices, regulatory pressure, EU carbon taxes. Single-use plastics bans, debt servicing $1.2 billion annual interest expense versus $281 million. Net income execution risk, delayed path to zero project. European asset shutdowns. 10. Final summary and recommendation. Investment thesis for defensive investors. Strengths: high dividend yield, undervalued on PS basis, sustainability leadership. Weaknesses: cyclical earnings, high debt. Negative FCF catalysts: cost-cutting, cyclical recovery in industrial demand. Recommendation: hold for income, avoid for growth income investors. Attractive yield, but monitor debt sustainability. Growth investors: overexposure to commoditized products and weak row limit upside. Entry point: $28 share for margin of safety.